people at the top have done extremely well in Australia, and that's partly a result of economic growth and asset prices and partly our tax settings. And so the middle is stretched thin, you might say. I wouldn't say it's disappearing. It's not like a crisis, but it is this kind of shrinking or stretching effect such that those in the middle are doing less well from an asset, an income perspective, and maybe facing higher costs as well, right? So sort of struggling more in the middle.
Hello and welcome to Recap, Per Capita's research and policy podcast where we unpack some of the biggest issues facing Australia. My name's Emma Dawson and we're coming to you today from the lands of the Woiwurrung people of the Kulin Nation. I pay my respect to their elders past and present. I'm delighted today to be joined by Professor Miranda Stewart, who was one of our keynote speakers at last month's Per Capita Community Tax Summit. Miranda is one of Australia's leading experts on our tax system and a professor at Melbourne University Law School, and is a driving force in the university's community tax project, that we had in the summit in February at Trades Hall in Melbourne. Miranda, thanks so much for joining us.
It's a pleasure. Great to be here.
So just to recap your address at the summit before we get into some questions that allow you to unpack the issues for our audience, you made the point that taxation is the foundation of a functioning society, that it provides the revenue we need to fund essential public goods and services such as healthcare, education, infrastructure and social security. But it's not just about raising money, it's about shaping the kind of society we want to live in. You very clearly made the case that our tax system is outdated and it needs significant reform to ensure fairness and sustainability. And you also made the point that in order to achieve that reform, the government has to communicate the role of tax in building a good society and in order to achieve reform in a way that rebuilds trust and legitimacy. I want to start with something you revealed at the summit and in our discussions prior. It's a really concerning development in Australia. You noted that the middle class here is shrinking and wealth inequality is increasing. Can you tell us a bit about the research you've done that uncovered that development?
Yes. So the comment about this idea of what is the middle class, actually, when we think about income and wealth, is relevant to think about the distribution of income and wealth as a whole. And we tend to think about ourselves in Australia as being middle class. I mean, we're a rich country and we tend to think that wealth and opportunity and income is reasonably fairly spread, more or less across the population. And I guess to some extent that is still true. And that was kind of, in a sense, the success story of the 20th century. And that was achieved by economic growth, but also by effective tax and spending and welfare systems. So we have that sort of dream of home ownership, where there's that idea that the majority of Australians over their lifetime live in their own home. We still see that the vast majority of older Australians, those aged sort of 70 to 90, do actually live in their own home. But what we see in recent research about trends in wealth in particular is that the value of assets for those who have access to those assets, and the home or real property, key component of household assets, that value has really gone up dramatically. We can maybe come back to talking about house prices, but that's a very well-known story. People have also increased their individual or household sort of financial wealth, largely through superannuation, kind of forced saving. But that has increased much less quickly than house prices. And so we get a kind of thinning of the middle. So the middle class has, over the last 20 years and sort of done worse relative to the top and also relative to the bottom. So people at the bottom are still doing very badly. So we do have quite strong wealth inequality in this country. People at the top have done extremely well in Australia, and that's partly a result of economic growth and asset prices and partly our tax settings. And so the middle is stretched thin, you might say. I wouldn't say it's disappearing. It's not like a crisis, but it is this kind of shrinking or stretching effect such that those in the middle are doing less well from an asset, an income perspective, and maybe facing higher costs as well, right? So sort of struggling more in the middle.
Yes, certainly our research in the Centre for Equitable Housing and other areas would bear that out. It's, of course, a phenomenon that has led to a lot of social unrest in the US, is that sort of feeling that the middle class, or the pathway to a secure middle class life, is increasingly out of reach. As you say, we're not at that crisis point here. But there is, and this brings me to the next issue, there is a feeling amongst particularly young people that those pathways that were open to previous generations to build a good life through their own work have been narrowed considerably for younger people. We see this with the Forward's campaign to tax wealth, not work. Both you and Ken Henry, who is another of our keynote speakers, said at the summit that you believe Australia's tax system relies too heavily on personal income tax from wages. Can you unpack that for us? Are we unusual in our reliance on tax from labour income?
So we do rely very heavily on personal income tax, or just income tax, full stop. That in itself is not necessarily a bad thing. So I just want to be clear that the personal income tax is really a mainstay of our system. It raises, as I said at the summit, sort of 3/4 of Commonwealth tax revenue comes from the income tax on individuals, companies and super funds. The lion's share of personal income tax does come from wage earners. And, that's partly a good thing. That's our success in establishing an effective wage withholding system whereby we all contribute and we have progressive rates applied to that wage income. However, the effective tax on capital income and gains, not like interest on a bank account. Interest on a bank account faces really high, progressive marginal tax rates, but other forms of savings and investment do face lower rates in the base, and therefore we have this kind of uneven system, I guess, where I feel like we are beginning to overtax, especially moderate wage earners, relative to high earners who actually would have more ability to pay, and also relative to those who are either relying on previous savings, so retirees with substantial savings, essentially now tax exempt for them, or people who derive most of their return from capital gains and investments. Which of course is the top. I mean, 10% of the capital gains earned in Australia, most of them go to the top 10%. Most of us, you might think, or you get a bit of gain if you own an asset or something, but most of us have minimal gain. It's really the top 10%. So it's that unevenness I'm concerned about, not so much that we shouldn't have a strong income tax, but that we should rebalance that income tax.
You did say, though, at the summit that the solution's not just to tax the rich. We were asked about, for example, we were asked from the floor about the current Greens policy to tax billionaires to fund a number of big spending programs they'd like to see. And I think you essentially said this was worth doing for equity reasons, but it wasn't going to deliver the outcomes that we need across the tax system. Can you explain that for us? Particularly, how do billionaires hold their wealth? How could we effectively tax them better? And why is it, I suppose, necessary but not sufficient?
So I think an important starting point for that question is, what do we mean by the rich?
Yeah.
And, so we do tend to all think we know what it is or who we're talking about. And it matters quite a bit, actually, in terms of the kind of policy design you might recommend. So if the rich is billionaires, what we know is there's only a few of them in Australia and globally. Of course, they are incredibly rich, like rich in a way that we cannot comprehend. They have way more assets and income than they could ever consume in their lifetime. So potentially one could seek to tax billionaires in some way, and I might just come back to that. But before we get there, what about the millionaires, right? So this is like a whole sort of decimal place or more lower incomes and gain. They still are very much better off than your median wage earner who's on $70,000 a year, right? 70 or 80,000 a year. So one policy could be just to increase marginal rates a bit up the spectrum. You have to be aware that people who have income and assets, especially from investments, can change their behaviour, can relocate their investments, could take them out of the country. We have open capital borders. So there will be a behavioural response, an economic response to higher tax rates for those people. Still, we could do it a bit, and we could tax their capital gains more and their assets more. And so I would support doing that carefully. We probably could tax billionaires as well. And the question is, how do you do that? Most wealth of billionaires is what we would call unrealized gain. It's held in equity, usually in very large private corporations that may be local in Australia or global. Essentially, they hold a big chunk of a very, very valuable corporate entity, often not enough to control that entity in terms of direct managerial control. It could be 7%, but 7% of Hewlett-Packard or Apple is enormous, right? So we could tax them, and what we would need to do is look at the value of their equity and kind of apply a tax, even though they don't derive it all in money. What that would do, essentially, they may pay some of the tax, they may sell down some of their equity. But what is likely to happen is that the investment structure, the corporate structure, will change. The only other point about billionaires to make, I suppose, is that we could, if you would think of like radical revolution and let's not just tax the rich, let's confiscate their wealth, which of course is something that's happened over the centuries. If you confiscated the wealth of the world's billionaires, you would do drastic things to the economy, but leaving that aside, you would probably keep the budgets of one or two countries, Australia, New Zealand, going for a couple of years. A few years. So it's important to understand the scale. Australia's tax revenue take is about $600 billion a year at the moment. Even if we confiscated the wealth of the billionaires, we could not support. So we depend on ourselves, taxing ourselves as a population as a whole. We should probably tax billionaires a bit better. There may be ways to do that. We could also just do regulatory anti-competitive law to break up some of those big monopolies. Because what we're talking about really is intervening in our economic structure when we talk about taxing billionaires.
You mentioned there that, it would require taxing effectively unrealised gains, not just on billionaires, but on a lot of millionaires as well. We've seen really vociferous objection to that in the current government's proposal to lift taxes on superannuation balances over $3 million. Can you just unpack for people a little bit what taxing unrealised gains actually means and why there is that objection to it coming from certain sectors of the community?
Yeah, people, we do have a strong kind of, I would say almost intuitive or visceral reaction to the idea that we should be taxed on things that we have and that we can sell, we can transact with. So we have money coming in, wages or dividends or whatever, okay, we can tax that, right? We have a taxing point. We buy a house, we have a transfer at that point. That's what we call a realisation event, or that transaction in sort of tax jargon. So when we talk about taxing unrealised gain, we mean the accrued gain in an asset that has not been dealt with or sold in some way. That's not immediately cash in your hand. If you didn't have any other cash, but you had a share that had gone up massively in value and I taxed you, how would you pay the tax? You might actually have to sell some of the shares to pay. Now, that's not necessarily a bad thing, but we have to understand that consequence. So this sort of taxing the $3 million, the asset value inside super funds, some of that is unrealised capital gain because super funds, they have some cash, they do hold liquid assets, but they also hold shares and securities and real property. And so some of those assets have accumulated in value over time but have not yet been sold. The thing about super, though, the concern I have, or the criticism I would have of those who criticise taxing the unrealised gains in super is that, of course, in a sense, the super is already not accessible to us. The super fund itself can manage its assets effectively with adequate notice, can sell down some assets, can invest in other assets, and can maintain the liquidity required to pay a tax like that, as long as it has adequate notice, transition time to transition. So it's not that hard, and we seem to have made a really big deal out of that in this country. But still, this unrealised gain thing is very politically difficult and sometimes administratively difficult as well.
It really does go to the point, though, that people don't like paying tax on things, like you said, on things they own, on wealth they have accumulated, and they see it much more visibly than just the bit that's taken out of their pay packet or their investment returns on a fortnightly or monthly basis. And so you did, I think, call pretty strongly, said that the government needs to justify taxation and reforms to taxation by linking it to public benefits. Essentially, people don't like paying tax, so they need to be persuaded there's a clear and beneficial return for doing so. Do you think Australians more broadly understand that that effectively, as one said, that taxes are the price we pay for a civilised society?
I think Australians do understand that. And obviously, Australians look to government to deliver quality public services, to deliver social welfare. I think we do have a strong view that the poorest should not starve. I'm not sure how generous our view is on that when we look at the history of sort of the levels of social security and their lack of adequacy over the last few decades. We're a bit parsimonious, I would say, and frugal on that front. But what I'm, yeah, that's, but I think so there's a broader question of trust in government, I think. So the tax piece is linked to the piece as to whether Australians actually do trust governments at all levels to actually succeed in delivering what they want, the services that they want. And if you don't trust that, then that can create, I guess, resistance to increasing taxes. The biggest story, though, that I would like to link what I see as the need for tax reform today to is actually the story of economic prosperity and security for all of us. So a government, it seems to me, needs to build a narrative of ensuring that we're all better off. And that's not just a matter of precisely just because of what is spent by government, but it's actually the economy as a whole is generating economic security and well-being to people. And so tax is a part of that broader story about prosperity. And that does seem to me to be the narrative. So when I say we really need tax reform, we probably also need more revenue, but we need in particular secure prosperity. And we live in this time of global economic and geopolitical uncertainty, and people really struggle with that.
Yeah, I agree completely on that. You also made the point that historically taxation has actually followed major social policy shifts rather than leading them, so that perhaps some of our political leaders have lost sight of the fact that rather than say we're going to tax you in order to do this, we should actually do the thing, demonstrate the benefit of it, and then people will be more persuaded that the taxation's needed to fund it. Is that historically how things have played out?
So I think sometimes things have played out that way. The sort of leading with a narrative either of delivery of something better or of generating higher growth and prosperity, more or less higher wages, right, to all of us in a sustainable way, or a lower pollution, an immediate effect on our life in the city, for example, or our cost of health. Like, these immediate things are a really clear message. And if one has to then say, well, now we're going to have to work out, we've got now 2 years later, there's a fiscal deficit, and how are we going to manage prudently our fiscal affairs? We need to do some tax reform. The NDIS Medicare levy is a well-known kind of direct link where people kind of seemingly accepted putting up that Medicare levy. No problem. No government's going to go back on that now. That did flatten the rate structure a bit and meant that moderate and low earners are paying more, really, quite a bit more in some ways relative to higher earners.
Certainly a big challenge to bring our tax system up to date, not just to deal with this growing inequality and that shrinking middle class, but the challenges of the climate transition as well, which is something that you touched on. So before I get to the pathway and how we might get there to reform, there's been some news this week. The independents in government have taken up Ken Henry's suggestion made at the tax summit that we should look at indexing the income tax brackets. And of course, Ken also is an advocate for simplifying the income tax and possibly even removing one of those brackets. You don't share that view. You think the progressivity of our income tax system is an important thing to defend, as do I. Was a big critic of the original stage 3 Morrison tax tax cuts that would have flattened that system. Why do you believe that we need to protect that progressivity, and what's your view about indexing brackets?
So progressivity, two ways of thinking about the tax system. I mean, one is you look at the system as a whole, so all the different kinds of taxes and kind of welfare provision we have in the system. We've got the GST, we've got excises on alcohol, tobacco and fuel, we've got that big income tax, we've got state stamp duties, land taxes, so on and so on. If you look at the whole system, the main taxes that actually deliver tax on the basis of ability to pay, that sort of distributive justice element, are the progressive personal income tax, having a company tax rate at a reasonable level, and land taxes, sort of because people who own land obviously are better off than people who don't. So those taxes deliver progressivity, and in particular the whole system is probably more or less proportional, right, to our income and assets rather than highly progressive. So we need to protect the progressive elements in the system in order to ensure the whole system is fair. And the argument often made against progressive rates is that higher income people will respond with tax planning or will reduce their work or their investment activity. There's actually very little economic evidence, empirical evidence that high income people change their economic behaviour. There is evidence of tax planning, but there are ways to respond to tax planning that I think are quite doable. So, yeah, I don't think we should critique that, and I think we should protect that. We could probably do a little bit more progression at the top without harming the economy in any way. Indexing is really an interesting question. Australia, we did it very briefly. I can't remember if it was in the 70s, and then repealed it because governments rely essentially on that buoyancy of the income tax as a kind of automatic revenue growth mechanism, and that also leads to this bracket creep issue. It may be, maybe it is time. This is politically very difficult, but some countries that we would often compare ourselves to, Canada is one, do index their tax rate brackets. The UK does, the US does. On the other hand, many countries don't. We index quite a bit of the social security system. We index payments, we index some income and asset test thresholds, but we don't index the tax bracket. So it's a bit like uneven, our response. It's not really very coherent or comprehensive. If you did it, then maybe that little extra revenue that the government can kind of rely on is not there, and it has to be more explicit about its policy choices. And that perhaps is why Ken Henry is perhaps thinking now's the time. Whether you get a politician on board for that is another matter.
It is indeed, and it's linked, isn't it, to the fact that, as you say, we seem to have lost that capacity to persuade the Australian people to come along on big reforms. So indexing the tax brackets would require economic leaders, our treasurers, our shadow treasurers, whomever in those political parties, to say, okay, we're going to raise money through this new tax or this reformed tax over here in order to fund, the increasing costs of services. So it would require us to return to a time that many of us are nostalgic for, when we had political leaders that explained and persuaded the public of the need for those reforms. Maybe a little bit of a big challenge at the moment.
I suppose you could kind of have it a reform package that said, finally, we're going to index these brackets, aren't we? Great. Everybody should vote for us. In order to kind of manage the system better going forward, we're going to broaden the base a bit, or we're going to we're going to reduce that capital gains discount or other things that are in the base. And, that would make sense. I guess the thing is indexing the brackets. Well, indexing to what? You have to decide what your metric is. We've seen that HEX indexing has been very painful for students because it's been indexed to a very high proportion once inflation started to rise. And I guess a government could remove it, but that might be politically challenging down the track, and that's why we see political reluctance, I think.
And speaking of political reluctance, you made a strong case for Australia to revisit inheritance taxes at the summit. You said we should have reformed inheritance tax rather than abolished it in 1980. And of course, inheritance taxes are very unpopular with the Australian voters. The death tax scare campaign from 2019 election lives on. Why do you think it's time to revisit inheritance tax now, and what might they look like if they were to be effective and successful?
Yeah, I mean, I have strong, connections and networks with the tax profession and members of the profession in this country, and they'll probably all jump on me. Or on the other hand, they'll thank me, because there's no doubt that if you do have an estate and gift tax or inheritance tax, you probably generate more tax planning. You actually probably do generate more work for tax lawyers, because there's no doubt that the people affected by such a tax will seek advice. But I think we need to step back and remember, so Australia is supposedly this land of the fair go. We do have this idea, not so much that we want to level everybody down to zero, right? That's not what this is about. It is about a kind of equality of opportunity story. And it does seem unfair to me, and kind of not in alignment with our vision of what Australia is as an equal place, that someone whose family has a few million in various assets, in superannuation, in real property, can really provide for their children, their grandchildren. And we are absolutely seeing this happen. We are seeing tax planning, generation skipping trusts, paying for house deposits for one generation and the next, private school fees, health insurance cover. And so that's like 10% of the population or less. And the rest of the other 90% don't have that and rely on public services, which are fiscally constrained. So, it seems that's why I think that's the base case for it. We're very rich and we now have this increasing wealth inequality. How would you do it? Well, I would have a pretty high threshold. I mean, so any number I say, probably someone will have an argument as to why it's too high or too low. 5 million, I don't know, let's pick a big number. That's a big number to me. Even if 3 million, or you could say 10 million, which is very high. And in the US, the estate tax really is only capturing a few people right at the top and is probably broken, I would say, over the last. So you have a pretty high threshold, and that was one of the problems in the early 80s, was that the threshold had not been properly indexed, had not been reformed, was hitting widows. There was actually a feminist advocacy for abolishing the estate tax in Australia. It was a kind of, in part because it was so low and women were inheriting and then losing the home. And also because women were doing unpaid care labour and had not earned a salary and in a sense felt entitled to that inheritance. Fair enough, right? So you need an appropriate threshold and you need an appropriate collection mechanism. So you do need a kind of valuation probate type process to make it work. I think we definitely can do this. And maybe you need to exempt the main residence, but I'm not sure about that. I'm more inclined to think you need a sort of a threshold of gain or asset value over which you'd apply it.
I won't hold my breath for any of our political leaders to take an inheritance tax to the Australian people anytime soon. But as you say, if we are going to maintain that idea that Australia is a land of the fair go, of opportunity for people, it's not about handouts, it's about ensuring people have the chance to build their own life on a level playing field, then I think, given the scale of inheritance we're likely to see in the coming years and next couple of decades, it's something that has to be part of a big conversation. So it's pretty clear, it became clear at the summit from everything you told us and that Ken Henry told us, Catherine Trebek and the panels, that Australia's long overdue, well overdue for some ambitious tax reform. There does seem to be some momentum, particularly on the crossbench, to say the next term of Parliament should look at this. Of course, the purpose behind the summit was to get some voices in the room that otherwise aren't heard on these issues in the community sector and the people they represent. So if we are going to push for meaningful and ambitious tax reform, what do you think is the best pathway that we can take to get there sooner rather than later?
So, it's always easy as an academic to say, well, government should do this, a politician should do that. Bill Easterly, who was an economist who worked on sort of in the World Bank and other institutions for many years and then critiqued them, always used to say the innovators are business people and politicians, democratic politicians, and somehow they find a pathway. Maybe they don't always find a pathway, though, and that's where we see sort of business and policy failure. I do think this prosperity and economic security to me, that seems to me the most important thing. And what people might need to the message we need to get across is that the tax system is a part of that. The tax system is not in opposition to economic prosperity or being able to get a house or being able to earn decent wages and have a bit of support for your kids. The tax system is a part of that, and we're all kind of co-partnering in delivery of our quality of life and our education and health, and transition for climate as well. I mean, with President Trump in office, pulling out of Paris and stuff, this is really, people are worried about, I guess, what's going to happen with energy transition. But I think we're going to keep seeing the energy transition, and so we need a tax reform that supports business and climate transition, but also reduces some tax on wages. And in order to do that, we're going to have to broaden that base and tax our capital investments and savings of individuals a little bit higher than we do, and our land higher than we do.
Well, thank you for your time, not just at the summit, but today as well. One of the things we are going to do with our community tax reform initiative coming out of the summit is use a lot of the material and the footage we got and recordings like this to try and explain to people why it is in their interest to participate in a big national conversation. Because really we're talking about what kind of country we want to be, what kind of opportunity we want to give our children, and what kind of world we want to leave our grandchildren. So we're so grateful for your expertise and for the way you explain things in a way that non-economists like myself can really understand. So thanks so much for joining us today, Miranda.
No, it's a pleasure, and it was great to be at the summit with such a big discussion happening.
Yeah, I think we were all left that feeling pretty energised, and the challenge now is to keep up the momentum. Thanks again.
Thank you.